Well, the US job report is back for the month of August. And these are not the initial numbers we expect to be receiving, but at least they are some kind of practical numbers, which we'll be calling close to reality. In the month of August, the US job report came up with almost 22,000 jobs attained in the month of August. And these are not the actual numbers, and this is the number that we expect to be heading down, like to be revised once again to a number that we are not certain of which we think is going to be permanently going down, like it will be inching down. And if you remember well, in the month of July, where we had almost 143k jobs attained, but in actual sense, we had 13k jobs attained or 13,000 jobs attained. You might think like we had the best numbers. Okay, we have done better than the previous month, but remember, if in July we had almost 143k jobs, in actual sense we had 13k jobs attained, and in the month of August we attained only 20,000 jobs or 22,000 jobs. What do you think will the figures be if revised? See, I'm not like trying to act like any kind of pressure, like to conduct any kind of panic numbers, but here's the numbers. We are speaking number. This is propaganda. I was picking up like just coming up to show. If you look at unemployment today, unemployment almost rose to 4.3 from 4.1 of last month. That means unemployment is going way harder. Way like the US government is not just failing to come up to accept it, to say that we are facing what they call stagflation. Stagflation, that's when the economy forgets how to grow. Because if you look at a year-over-year GDP, the US is expected to go by almost only either 1.5% or 2% just for 2025. And if you look at this kind of job report, you think the Fed cutting interest rates will be good for the economy. And yeah, as for right now, we expect that the Fed to be cutting by at least, we are 99% that the Fed will be cutting at least by either 0.25% or 0.5%. Regardless, it can be either way. Even Paul may say, I'm not cutting anything. Because we may think and that's expect that cutting interest rates will be good for the US economy, but expect to lose more purchasing power, because this is a trend that's not going to stop in actual sense. The government is not going to stop spending, and none of this is likely to be stopping. Okay, in good or bad, even the solutions look to be hurting the economy, because if you look at the Fed's cutting interest rates, you're gonna expect inflation to be surging or getting more higher or getting more hardening in simple terms. Expect inflation to be surging high in simple terms, because cutting interest rates means like there's gonna be a lot of printing of money. Okay, they expect a weaker dollar. The dollar has been weak for almost for the last 4 months. It stopped being above 100. That was around in April. So if I'm right, or April, May, somewhere like that. For the last 4 months, the dollar has failed to go beyond 100. What do you expect when interest rates are started like getting lower in simple terms? It's gonna go a little bit down, because if when there has not been cutting, the dollar has not been able to hold it up. Just imagine after cutting rates down, what's gonna be taking place? Just looking at the report of the job opening, the job opening today, job opening has gone down to the extent that unemployment numbers are up more than the job opening report. When I say job opening report, these are the new jobs attained. Today, the job report numbers attained are almost 7.18 million jobs to be attained, and unemployment for itself is just up by 7.24 million jobs. Like That's that kind of figure lives you in a delusion figure, makes you believe that something's wrong in the US economy. Something's just heading in the wrong run. Like it's losing its consultation. Like it's not something like you're going to come up and say like we are looking at the best priorities, because the way the US economy looks and how it's heading to, it's a train that nobody can explain to you how it's gonna be solved. Even the face that's gonna be cutting waste, they are gonna be cutting waste without knowing why they are cutting waste. They're gonna do it because they have to do it. But it's not the actual solution for the US economy. It's not like the best time for the US economy to be running for. It's not the best way how anyone will be like saying this is the best solution, because everybody knows what's going to happen after cutting interest rates. It's going to be surging high. Expect higher prices for your home mortgages. Expect high prices at your consumer goods. Everything's going to be heading high, especially for asset holders. That's why today we are seeing central banks. See, that's why I like looking at central bank mostly actually, because these are the big movers in actual sense. Whenever you see central banks attaining to things like metals like gold when they're going high and high, ask yourself, why aren't they holding more of the fiat currency as they should be? Why are they today looking at things like gold? Imagine central banks are holding more gold than the fiat currency. That leaves a question. That leaves a lot of drama behind it. That leaves you in a setback. A thinking like, why are we even here? How did we even reach here in simple terms? Okay. This is a trend that gold speaks more than anybody says. Today we are looking at the gold prices going high and high, but in actual sense, gold speaks a language that nobody thinks that it does in actual sense. I'm not saying wake up one early morning and buy gold, but look at the movement gold does. See, if you're expecting to be buying gold when interest rates are going, when interest rates are lowered, I would feel like that's a wrong move, because gold has already made the move. Today, gold's up by almost 7,500, topping up. By the time they're gonna be lowering interest rates, gold has already done a move. Same thing how gold reacted in COVID. Gold always moves fast in that sense. Because why gold moves fast? The buyers are the central mark. The buyers are the biggest streets, and these biggest streets buy behind your eyes. Most of the time, they buy such assets behind your view. By the time you understand that things are upside down, they're already 2 or 3 steps ahead of you, almost 5 steps ahead of you, most of the times. Yeah, this is why if you look at the US economy today and the dollar, it's an empire that, I mean, it's a big word to accept, but the US empire is trying to look like the Roman Empire, like the falling Roman Empire in Second. Because I'm not saying it's not gonna be, I'm not saying that the US dollar is falling, but here's the funny part. If the dollars are performing bad and the US economy performing bad, what's gonna be replacing the US economy? Even what should be replacing the US economy, investors are unaware of, because it's something that's failing, but in actual sense, it's also failing to get a replacement. It's important. If you look at it in a way of understanding how things are looking at and the way they are heading to, we are using a fiat currency that cannot be replaced, that has no replacement. So we are either falling, we are on a ship that we're sure it's gonna fall, but we cannot get up. Simple terms. We're on a ship that we're sure that's permanently going down, but we don't know where else to go. Otherwise, we are seeing death everywhere. We're just okay. Also, the US wage growth grew by almost 3.7%, meaning that indicates like working hours for full-time employees are prominently going down, and wage workers, that means part-time workers, their jobs are getting high. That may feel like a good thing, like to say Kize. The moment you see like a part-time job, that means few working hours in simple terms that are gonna be got in simple terms, like received. Meaning that shows slow productivity. That shows slow growth in the economy. That shows uh, slow in in the growth of the US economy is important. So we should also try to understand that also the unemployment numbers year over year, that's almost 13%. And I'm speaking out after the job cuts. The job cuts also month over month, that's almost 39%. Those are big numbers. Those are big numbers to start with. Those are really huge numbers. Because the way it looks and the way it has been heading to, this shows that the US economy is not in its best hand or its best rules in simple terms. Well, thank you, Forge.